Hey, my name is Lou Sagatov. I'm here with Ray Hrabec, and we're going to talk about applying for a mortgage and the steps involved. Ray, can you give us a little bit of background of who you are and what you do?
Yeah, I'm a mortgage loan officer, been in the mortgage business in the DMV for this is the 50th year. I'm with a national company who originates and closes, and we service all our mortgages, meaning that the payments will go to us after your mortgage closes. We're not selling it to somebody else. And I've worked with Lou over the years and look forward to giving you some insight on the process.
Cool. Well, thanks, Ray. Well, so right now, I think the first thing is I want to talk about people that are looking to buy a home. And one of the first things that pops up is the importance of getting a mortgage in place, or at least getting a pre-qualification letter in place. Can you talk about what the importance is of that and what kind of what the process is for that?
Sure. Well, first of all, I don't think any agent is going to take you seriously unless you've been pre-qualified or pre-approved to purchase a home. The process is pretty easy. Most of the lenders, like ourselves, have an online application. And you have to fill it out with all your financial information. Your credit is pulled. And in most of these applications, you can pull your bank statements, your asset statements, the work number can verify your income, which would allow the lender to basically pre-approve you within a day. Now, some programs will require some additional information like W-2s, pay stubs, and bank statements, but most of it's pretty streamlined today. And not only do you know what you qualify for, but you'll get an education on what programs fit your particular needs and financial condition. You'll also learn about what down payments are required with each program and also what closing costs are. Closing costs are a big part of your purchase, sometimes 2.5%, 3% of the purchase price. And in markets like we're in now, where it is, needless to say, very hot, sellers aren't paying closing costs. So you need to know what they are as well. And then generally, once you get your contract, the information in your pre-approval just transfers on over. And sometimes you may not need anything else in order to go to the next step, which is process the mortgage for the actual purchase.
Wow, that's a lot different than what it used to be for me anyway.
Oh God, I used to sit there and take them by hand.
What about okay, so that's for somebody that works for is an employee of either the government or of a company, correct?
Correct. It's the easiest way to go.
Yeah. So what happens to somebody like me? And I remember where I'm self-employed, I'd have to send you a stack of papers that were 2 feet high and.
Probably about 800 pages worth of paperwork. I think we got from you that time. Killed a lot of trees with that one.
Yeah, yeah. But what's required for self-employed people?
Well, right now, since COVID, it cannot be harder for a self-employed borrower to be approved to buy a home. Not only do you have to submit your tax returns,
Okay.
2 years of tax returns is almost all, and you have to be self-employed for at least 2 years. But now, beginning this past June, lenders are requiring that self-employed borrowers provide an internal unaudited profit and loss. Now, in addition, they must provide their business bank statements that will enable the lender to see that the cash flow is what is stated on the internal P&L.
Okay.
And this has come down, I think June 11th is when Fannie Mae started the policy. And of course, everybody follows what Fannie Mae says. So it's very difficult for self-employed borrowers.
So, but you make it sound difficult, but the question is if I'm running something through QuickBooks and I'm not giving it to my accountant at that point, will the QuickBooks, what I'm showing as far as what I'm projecting in income and then the bank statement, does that take care of it, or do I need to go?
It takes care of it. QuickBooks is fine. Any kind of internal, unaudited P&L that you run is fine, but the key is the lender's got to be able to decipher from your bank statements that the business is ongoing and making the money that your P&L says it is.
Okay, awesome. All right. I mean, that's just an added step in there from what it used to be.
Yes, it is. We
Yeah,
never used to get the unaudited P&Ls because it really wasn't worth much. Oh,
right.
and you also had to provide a balance sheet,
Okay, all right.
unaudited, of course.
Okay, that's not a big deal. That doesn't sound that bad. You know, as running a business all these years, I understand that's just part of the running a,
Well, it depends on the business. I mean, if you're a builder and you don't sell anything in the last 6 months and you sold a house a year before and had a profit, you're not showing any income at this point. Or perhaps if you're a realtor and you had one sale in January and your next sale is not till August, well, you have no income coming in. So it's kind of hard to assign an income
okay,
to that particular buyer. Now, someone who's a consultant, uh, contractor, 1099 contractor, that is pretty simple if you're self-employed.
okay, all right, cool. So, how long does, so the pre-qualification letter takes about, you say, a day or two, right, to get?
Be a day or two, most over a day or two. I mean, the stuff is usually there. Sometimes the system will issue them a letter, but I always tell them, let me go through it as well.
Okay,
And then once you get your contract to buy, we're telling people today, because of the volume and backlog, to allow at least 35 to 40 days to get to closing.
okay,
Uh, Lenders are inundated because of refinances, and all my friends that are with competitors, we're all pricing refinances higher to slow down the volume so we don't impact the purchase business.
okay, all right, interesting, okay. Um, what, um, what, what about interest rates and what do people think about, I mean, how do you think about interest rates correctly instead of just getting all gaga about it's under 3% and what does that mean? How does one really look at what an interest rate really impacts the long term of a mortgage?
Well, I think first of all, you need to have your lender keep you updated on your interest rates because they're going to vary depending on your down payment and your credit score. Right now, most of them are below 3%, which is the lowest we've had in history.
Okay,
Uh, and most people are taking 30-year fixed rate mortgages. Some take 15 if they can afford the higher payments, but we're not going to go down much further from where we are.
okay,
Maybe an eighth, maybe a quarter max is what I'm hearing.
okay. And then are people having to pay any points? And if they are paying points, can you explain what points are?
Well, the point is a loan charge. It's the loan origination fee normally. 1 point is 1% of the loan amount. So if you borrow 400,000, 1 point is $4,000. Normally, if you pay a point, that will lower your interest rate in most cases.
Okay,
We very rarely have any mortgages, at least on the purchase side, where anybody pays any points. You can get, I think we locked one in the other day at 2 3/4 for 30-year fixed, 0 points. If you wanted to go to 2 5/8, you had to pay a point, and it wasn't worth it.
okay, all right, that sounds good. Um, what are the kind of different programs that you're seeing out there, and besides the 30-year fixed, is there any other program that's really a hot ticket right now that people are considering?
Not really. Sometimes on the jumbo mortgage side, there's loans that are up around $1 million, $1.5 million. We see some people taking a 10-year adjustable, but for the most part, with rates around 3 or below 3 for a 30-year fixed, people are going with that. I mean, they don't know how long they're going to be in the house. We don't see many purchases taking 15 or 20-year loans. I haven't done an adjustable rate loan in probably 3 years.
Okay, I mean that's from the trenches. That's good news, you know, because we're always looking at on my side, we're always looking at, oh, these are the different programs, but then it's good to see what really people are focusing on and what really makes sense from the standpoint of.
And the nice thing today with the programs is you can get a first-time buyer into a home with a 3% down payment.
Really?
Fannie Mae has a product, max loan I think is 510,000, but a buyer can get in with only a 3% down payment.
Cool. That is awesome. All right. What is there anything else that people need to consider? And I'm looking over here at my notes, so that's why my eyes are going to the right. Is there anything else that people need to consider as far as getting this process going and how to.
Well, I think they should get all their ducks in a row, get all their bank statements handy, pay stubs, W-2s in case they're needed. They have to understand their credit score is going to affect them greatly. Not only does it affect the interest rate they get, but it may affect them not getting a loan, period. Credit has tightened up considerably because lenders are afraid of making loans to people that may go into forbearance.
Okay.
This is about as tight as underwriting has been since the mortgage crisis of 2008.
Okay. So what are the credit scores that we're looking at that?
Well, for the best rates, you have to be 760 and above. And these are mortgage credit scores, which are different than your normal consumer credit scores.
Okay.
Mortgage companies run 3 scores, take the middle of the 3. So 760 and above gives you the best interest rates you can. Generally, most lenders stop lending if your credit score is below 620.
Okay.
There may be some that do, but very few lately.
Okay. So credit score is really the driving factor, and it's going to affect rate, I guess, too, right?
And it can affect your rate as much as 0.75%.
Wow. Okay. All right. So
And
that's
it doesn't take much to screw up your credit score. You could miss a little credit card payment in the last 30 days and you'll drop 60, 70, 80 points.
Yeah. No, I understand that totally. Well, this is fantastic. It's great information. Do you think there's anything else people need to consider when they're moving forward through this process?
Well, I think they need to talk to their agent and find out some lenders from their agent. They need to get their settlement attorney when they're ready from the agent. And they need to make sure they understand closing costs, what they're paying for, and how much they're going to be. Because you need that in addition to the down payment, as I said earlier. And just constantly ask all the questions up front, because once you get to the settlement table, as you know, that's a 30, 40-minute process for the biggest purchase of your life. And you want to know what you're getting into at that time, whether it's title insurance or what types of title insurance and what are recording fees, yada, yada.
Okay, that's fantastic. So the settlement company is really going to give people the closing, the fee schedule for closing costs throughout that. So
yeah, I think we all probably provide them one sheet or another that goes over them. I like to explain every one to them so
right.
they know who it's being collected by and who's paying it and whose pocket it's going into.
Okay, so you provide that as well?
Yeah, with the pre-approval, we provide a whole list of closing costs. We try to find out which settlement agent their particular real estate agent works with, go to their website, get those costs, reporting fees from them, put our costs on it, and then just send them a list of what they are, how much they are, and who it's paid to.
Well, that's fantastic. That really gives people the whole.
Most people think they all go to the lender. Well, no, the most of them go to the title company, and then the tax stamp to the county and the city and the state. And right away they say, oh, look, your closing costs are high. Well, ours are like this, and this is what everybody else is getting.
Yeah, the government always puts their.
And they never ask about title insurance, so they automatically get charged with the super Cadillac owner's coverage.
Right. Cool. All right. Well, listen, Ray. If there's anything else that's missing in this conversation.
No, but I'm admiring that artwork behind you there.
Well, thank you. Thank you. All right. Well, listen, I appreciate this and you coming on board for this conversation. If anybody who's listening to this wants to get in touch with Ray, I'm sure that just shoot me an email or give me or we'll post Ray's contact information at the bottom of this, or at the end of this webcast here, so you guys can contact Ray directly or contact me if you have any questions. Again,
yeah, just feel a call about anything.
Great. Thank you much. And
Lou, thank you. Take care. Be safe.
You too. We'll talk soon.
See you.
Bye-bye.
Bye-bye.